work he did. By the way, Jeffrey is not here. He did not contact me, and I will send him an email offering him to take the exam on Monday. I'm always here on Mondays, just working in the lab, with less curve points because he had more study time, right? Okay, and if he takes the exam, then we can look it over next week. I will pass it out, but I do collect it back. So, and no tape recording during that part of the presentation.
Do you post the scores for me?
They'll be in the online gradebook, yes, and I'll send an email out describing, you know, my after-action report. So they will be in the online gradebook, but there won't be comments, whereas there's comments in the online stuff. But then we'll look them over, and in week 6, we'll take another exam here in the room, a little bit longer one, and then again we'll go over that in week 7. So you have a chance to look over my comments. I'm going to start with this charitable contribution sheet. That also includes that information on the board. Now, we'll talk about the limitation on charitable contributions for corporations in week 7. They also have limitation restrictions.
Charitable contributions are tax deductible, correct, for corporations?
Yes, but they're limited to 10% of taxable income without 4 adjustments. So we'll see that. That's another type sheet I have for week 7. For individuals, and I can see why taxes are confusing. When we talk about, for example, medical, the amount that you cannot deduct, is 10% of AGI, except for the old folks like Bill for 2 more years. But here, for charitable contributions, the maximum amount you can deduct is 50% of AGI. Miscellaneous itemized deductions, the part you can't deduct, is 2% of AGI. So there's so many confusing. Sometimes it's what you can't do, sometimes it's what you can do. That's what makes tax kind of stimulating, and why, if you can stomach it, it's a nice field to go into. Limited to 50% of AGI. What if I give more donations than that? The excess carries over, it says here, for the next 5 years. Interesting. When I first started in taxes, carryovers were pretty much all limited to 5 years. Now, for individuals, most carryovers, not this area, are unlimited. Capital loss deduction for individuals. We'll talk about that in 2 weeks. Unlimited carryover. Not true for corporation, but unlimited carryover. Here, though, 5 years. What if you can't use the excess charitable contributions within the next 5 years? Lose it. And you don't want to lose it, obviously, because it's advantageous to take advantage of what's available to you. First dot there, or arrow, no deduction for the fair market value of services rendered or facilities provided. You got to be out of pocket. On our next exam, and I'm looking forward to it in 2 weeks. We have a union bartender.
Which one of us?
That's right. Only
A
on one
union
side of the room
bartender.
here.
That's an option.
We have a union bartender. He's going to do bartending at the church gala, New Year's Eve gala. He's not doing it for free. He's doing it for half the union wage. Can he deduct the discount that he gave to the charity? No. What if he did the bartending for free? No. There's no deduction for the fair market value of services rendered. A few years ago, an attorney intentionally challenged this regulation. He did legal work for a charity. He deducted the number of hours he legitimately worked times his normal billing rate, and he told the IRS on the return he attached a statement indicating what he did, because he wanted them to challenge it. Took it into court. They said the regulation is valid, no deduction for the fair value of services rendered, and in fact they even assessed the negligence penalty because they said he operated contrary to the teeth of the regulations.
Oh, so he got fined for that?
That's right. But, I mean, he was doing it on behalf of like a taxpayer.
See, that's why I don't do my own taxes. I did my own taxes one time, and when they figured out that I had jacked it up, they assessed me this big old fine that I had to pay. I'm like, look here.
I'm always looking for your return. I'll just send as get that informant's fee to the IRS here.
Oh, right.
Now, if you were a house painter and you painted the church or something, you couldn't deduct your services, but you could deduct the cost of paint or supplies that you actually incurred. Or if you hire a bartender to bartend at the New Year's Eve gala, then it would be entirely deductible because you're out of pocket the entire amount. For fundraising events, some of you have already been posting in these areas. The $100 a plate dinner at the Palmer House Hilton for the American Cancer Society. You can deduct your cost less the fair value of what you're going to receive. On that same question on the exam 2, you're going to buy 4 tickets to the New Year's Eve fundraiser at the church. Let's say it's $100 a ticket. The fair value of what you're going to receive, let's say it's $75 a ticket. There'll be a buffet, there'll be some non-alcoholic beverages, some entertainment. So you paid $100 a ticket. Fair value of what you receive is $75. Charity has to tell you that. How much can you deduct for each ticket?
75.
Well, 25. You paid 100, you get $75 worth of benefit, you can deduct $25. Let's say I bought 4 tickets on the exam, and myself and a significant other used 2 tickets, and we gave the other 2 tickets to a needy family in the community, and they used the tickets. The fact that they're a needy family is not going to be that relevant. The fact that's relevant is how many tickets were purchased and used. 4. So it'll be 20, in this example, $25 for each of the tickets times 4 tickets. And again, we've had some posting in this area. No deduction for pledges. Yeah, promises are cheap. You gotta cough up the cash. All contributions must be made to duly recognized domestic charities, and there are some exceptions. I have Israeli here because that's the oldest one. But some of you have researched also Canadian and Mexican charities with limitations. But this confuses me a little bit. If you went to the Luke campus, well, I was there Tuesday and Wednesday, and there's a gentleman who sits in a kind of a little small wheelchair type thing. It's not a regular full-size wheelchair. And he sits there with a cup in his hand, or in his lap, soliciting donations. So you drop money into his cup, do you get a deduction? No. He's not a duly recognized 501c3 or similar charity. But that confuses me. In the holiday season every year, the Chicago Tribune will often talk about a family who were burned out of their apartment. And of course, they had no renter's insurance. They could barely pay the rent. And they've lost everything. And you're supposed to donate to help this family and make their Christmas a little bit brighter. But why is that deductible? Right, it's done through a separate organization. I actually think the Tribune set up their own organization. I don't know, the Neediest Children's Fund or something. Same thing with Mother Teresa. Remember Mother Teresa? She died a few years ago, I guess, but she did so much work for the poor. And I think she was headquartered out of Calcutta, India. But a lot of her fundraising came from the US because she had a New York City-based charity that you contributed to that then funneled the funds to her. And look at those posts. I think a lot of this is by treaty arrangement with Canada and Mexico. I know the Israeli is by treaty. because that goes back to when Israel was attacked during Yom Kippur, back in the 70s, if I recall. No deduction for the purchase of raffle tickets, and somebody posted this. One of the key factors, and you probably should get this if you make a major donation to a charity, have them include a statement to this effect, that you are not receiving any special benefit from the charity in consideration of your donation. Otherwise, the IRS will argue it's like a quid pro quo. Somebody posted this, and they said if you buy raffle tickets, you're getting a chance to win a prize. I think it's Labor Day at the Kane County Fairgrounds. There's a Greek Orthodox church that rents the fairgrounds for the weekend. And it's a great event. When I was married, we went all the time. Not only do we enjoy the Greek food and Greek pastries that were for sale, but they had authentic Greek dancing and costumes of different styles and Greek products. But they also had raffle tickets. First prize, $30,000 cash. Second prize was a lesser amount, the rest went to the church. Tickets, $100 each. So you buy the $100 ticket, yours was not selected. Maybe that could be a gambling loss, but it certainly wouldn't be a charitable contribution. And we'd have posted
Gambling
some.
loss, that's a stretch.
I would say, well, to me, it's let's say I won the $30,000.
What
That's
if you
taxable.
want it and
That's
then
taxable
donate it
income.
to the charity?
Two things: I've got taxable income of $30,000, then I get a deduction, and I might have a trouble with the 50% of the HEI limitation. What if I refuse to accept the amount altogether? Then it might be the prizes and awards idea. If you say, no, I don't want it, do whatever you want to with it. Then you might avoid the taxability. But somebody in one of the classes, I might have been in here, posted a beautiful article that deals with those raffle tickets. Take a look at that. Personal use of your autos at 14 cents a mile. We had a little stuff up here the other day for mileage. So you faithfully attend church services and you can deduct 14 cents a mile, is that right?
Nope.
No. There's a provision, there can be no personal or recreational or pleasurable components associated with the mileage. To me, what they're referring to is something like this. I have a truck, and on Saturday, I'm going to go to different businesses, let's say in Aurora, and these businesses are donating prizes to be used for a silent auction for the church. So I spend the day picking this stuff up, loading in my truck. Then at the end, I go there to the church and I unload it so they can set it up for the silent auction. Not pleasurable work, it's like regular work. Then I could deduct the 14 cents a mile. Now, property contributions. If in the aggregate, you are donating $5,000 in property, you need a formal appraisal. The form is in the 8,000 series. I don't remember the number right now. The appraiser has to sign under threat of being charged, him or herself, with aiding and abetting the understatement of tax liability. In other words, the appraiser has to give a realistic appraisal. Will it always agree with the IRS appraisal? No. But they got to be in the same ballpark. But what about if you donate property like to the Salvation Army? Give a reasonable valuation. I remember many years ago my dad passed away. He had his favorite 6 outfits that he always wore. And we're going through his stuff after he passed on. And he had 75 pairs of slacks. I think about 50 of them still had the tags on them. They had never been worn. So, but if you have garments, for example, that are way out of style or have been severely worn, they have very limited value. Household appliances, an analog TV El Zippo. Be realistic. A VCR maybe will give you $1, as a fair value because you might have VHS tapes you can still view. So be realistic. Personally, I think most old furniture is not worth anything, but I've been mistaken there where someone says, no, that's a rare antique. To me, it looked like something that should have been thrown into the bonfire, but at any rate, so just be realistic. And we donated to a charity that was in Wheaton, I remember, and I typed up a receipt for all my dad's clothes and had them stamp it or sign off on it. Charities like the Salvation Army will not give an appraisal, but they will acknowledge receipt. Now, one thing that worries me a little bit, you see these Goodwill or AmVets boxes on the streets where you dump stuff in. There's nobody there to give you a receipt. So I'm hoping that people who drop stuff in those big metal containers, I'm hoping they are legitimately putting things in and giving a fair evaluation of those items. Now look at the indented part here. This will also be on the exam, of course. If property which would have resulted in ordinary income, and remember, short-term capital gain is ordinary income. Well, help me out a second. What differentiates long versus short-term capital gain? What's the holding period currently? A year. A year and a day. So let's say I bought stock that I paid $10,000 for, and I held it for 9 months. It's now worth $11,000. I paid 10, it's now worth 11. I held it 9 months. If I sold it, it'd be short-term capital gain, which is ordinary income. Notice what it says here. If property which would have resulted in ordinary income, including short-term capital gain, if sold, is contributed to a charity, your deduction is limited to cost, subject to the usual 50% limitation. In other words, fair market value less how much is appreciated. So I paid 10, it's worth 11, I held it 9 months, I can only deduct 10,000. But guess what? Let's say I bought the stock for 10,000. I held it 9 months. It's now worth 9,000. I donated. Guess how much I can deduct? The 9,000, the lesser amount. So it's fair market value at the date of the gift if the property has gone down in value. If the property has gone up in value, then it's cost. That'll happen where I'm going to donate some stock to the Red Cross that I held 2 months. It will have gone up in value. How much will you be deducting? Cost. That's missed more time on the exam. So remember that. But Bill, wait. What if I held the property for more than a year and it's a capital asset and then I donate it? That's this bottom part, Roman 1, Roman numeral 2, Roman numeral 3. Roman 1, tangible personal property not used by the charity, they probably sold it. No question here, I'm limited to cost with the normal limitation. I have a religious painting. I donate it to the church. They're very appreciative, they sell it, and they use the funds for charitable purposes, but the key issue is they sold it. I can only can deduct cost.
So you can deduct what you paid for it or what they got for it?
No, what I paid for it. My cost basis, good question, Deja, my cost basis. But let's say, look at Roman numeral 2. I donate this Madonna child. I donate it to the church, and they hang it in the rectory. And they're going to use it at least a year, probably longer. There's an election that I can make. Now, this is an irrevocable election. That came up in the 1990s. Somebody made the election, and they made the wrong choice, which they determined with hindsight. So within the 3-year statute of limitations, they filed an amended return, changing the election. Once you make the election, you got to do crystal ball gazing. Maybe you guessed wrong, maybe you guessed right. So here I can deduct fair market value of the date of the gift, but I'm subject to an additional limitation of 30% of AGI, or I can use the usual deduct cost, subject to a 50% of AGI limitation. We're going to look at some numbers on the board in a few minutes. Roman numeral 3, real property like land, intangibles like stock, same irrevocable election. Now let's look at the example on the board. This is from an old problem from the old textbook I used to use, and then I've updated it. Older than 80 contributes to a church. Land she held for many years. Let's assume she owns a lot of land next to her church, and they'd like her to donate the lot to them because they want to expand their parking lot. So she agrees to this. She held it many years. Her cost was $10,000. Fair market value was $16,000 on the date of the gift, or the date of the donation. She also gave cash of $200. Wow. Her AGI, $22,000. Land is real estate. This is Roman numeral 3. Roman 3. Option 1, she picks up the land. I think I should stand for this one. She picks up the land at the fair market value of $16,000. But she's subject to a 30% of AGI limitation, which is $6,600. So she'll pick up the land at $6,600. Now, what is $16,000 minus $6,600? What's $16,000 minus $6,600? $9,400. She has a $9,400 carryover subject to 30% of AGI in subsequent years. Add in a cash of $200, her deduction, $6,800. Total limitation is 50% of AGI, but this is below $11,000, no problem. So she gets $6,800 this year, one carryover, subject to 30% of AGI in future years. Or she can elect option 2. Pick up the land at cost of $10,000, cash of $200, that's $10,200, 50% limitation, but there's no problem with that because that's only $11,000, this is less. $10,200, no carryover. She's your client. Whatever advice you give her, she's going to follow. What might you want to know to influence your advice? I think of 3 factors, and we came up with 2 of the 3 on Tuesday night. What else would you want to know about this lady, so you could advise her? Come on, the Luke class got 2 out of the 3. You can't let them get it better than you, come on.
My feelings are hurt. I have dual citizenship.
There you go. Well, yeah, you've been in both locations. I think Chancellor gave one of the ideas. And, I can't remember who gave the other one now. All right, well, I'll start us off. Maybe you can think about it. One thing I would want to know is, what's the current state of her health? I mean, yeah, well, that's true. That's called like it is. If she's 97 years old, chances are she's on death's door. But if she's 75 years old and she bicycles 5 miles every day and swims 30 laps, I mean, She's in pretty good shape. Now, obviously, an accident could occur or something of this nature. So I think that would be influential, yes. What is her current state of health? What's her age? Okay, what else would you want to know?
Her mental capacity to make sure that she's competent. Because, like, if she's giving away this, doesn't she have to be competent enough to be able to do it?
Let's assume she's smart as a tack.
Smart as a tack.
Remember, the limitation is a percentage of AGI. So what else would you want to know?
If she's gonna have any other income?
That's right. What's her income level going to be in subsequent years? Because that will influence whether or not she can use a carryover. Excellent. Now, chances are as an older lady, it's probably going to stay pretty stable. But let's say her income went up next year to 30,000, AGI 30,000. So 30% of 30,000 means she could probably use $9,000 of that carryover in the subsequent year. And one more item. So we've got age or health, her future income. What's the other factor that might be relevant? Think about if you're going to have a lot of carryovers. Well, I'd like to know what's her donative intent. Is she going to be doing a lot more giving in future years? What do you think in this case? No, I don't think so. $200 is negligible. And chances are this land was a one-shot deal. But if she was planning on liquidating a bunch of paintings she had, you know, to donate to the church, and then she was going to donate a lot of stock to the church, she may not be able to use carryovers.
Oh, because it'll go over the...
Yeah, exactly,
maximum.
because that's going to keep adding up each year. Normally, you want the largest deduction in the earliest possible time. But if she's a small giver, which seems true to me, she's in good health, and her income's going to stay relatively stable, I might go with option one, where I get a lower deduction this year, but I get a pretty large carryover to subsequent years.
Under option two, I'm sorry, what does that say next to the 40? The circle?
No.
Oh, no carryover?
Yes,
Oh,
no
I'm sorry, I
carryover,
thought it was
right.
40.
Well, no, that C at slash O looks like care of, doesn't it? No, it's carryover, sorry, Bill's abbreviation. When I was in law school, of course, we didn't have laptops, so you had to take notes by hand. So I created my own shorthand. Like ER was employer, EE was employee. Now, no one else could read my notes, but you know, I could read them.
As long as you understand it.
Now let's make it more stimulating. In green, same facts, but she gave $20,000 worth of cash. Obviously, she must have some assets accumulated because she only had $22,000 of AGI. Option one starts the same way. Pick up the land as $16,000. You got a 30% of AGI limit, so that's $6,600. Again, $9,400 carryover subject to 30% of AGI in future years. Add in the cash of $20,000. Tentative deduction $26,600. 50% of AGI limitation. She can deduct $11,000. What's $26,600 minus 11? $15,600 carryover, subject to a 50% of AGI limit. Notice here she gets $11,000 this year. She has two separate carryovers. This one would be used first if she can use it, and this one's in subsequent years. Remember, she has to use them within 5 years, or she loses them. Here, we'll pick up the land at $10,000 cost, cash of $20,000, tentative deduction $30,000, 50% of AGI limitations $11,000. So again, she gets $11,000. What's $30,000 minus $11,000? $19,000. So she has a $19,000 carryover subject to the 50% limitation. So this case is interesting. Same dollar deduction this year, $11,000. But those two are almost a $25,000 carryover. Here, $19,000. Again, we don't know exactly. We may give her advice for the one. Turns out it wasn't the right advice. So on the exam 2, multiple choice 2, I always say do it last. Takes an awful lot of time for 5 points, Bill. We have a question like this, where some guy is going to give stock and cash to a charity. It'll be Roman numeral 3. You'll look at both options. Hint, option 1 will be more advantageous. Show the deductions, show the carryovers. So it'll be kind of like we did here on this board. This is the more analogous. But that takes kind of a lot of time for 5 lousy points, Bill. That's why you might want to do it last in case you run out of time. So, Bill, these are complex rules. Are they new? No. This stuff here, this appreciated property, Tax Reform Act of 1969. So it shows we had some complexity even back in those antiquated days. Questions on charitable. And again, there's also another limitation that I'm not testing, the 20% limitation for private non-operating foundations. I put some topics in the online discussion for you to pursue this more. This area of the text is very confusing. They keep talking about private charities, and I don't know what they're talking about unless it's those 20% types. So what I'm mentioning here is what would be advantageous for your study. Remember the bartender, remember buying the 4 tickets for the gala, remember stock if you held it for less than a year, how that's treated, and then that one problem like this. Remember giving money to needy families, soliciting there on the rivers, the bridge over the Chicago River. Those are not deductible and so forth, and you should be fine. If you have a very wealthy client who has, gives a lot of donations and things, you've got some major issues that you'd have to look at. Now the next field is medical. Now, on exam 2, I have a problem where in part of it you had to compute the deductible medical expense. Now, I'm using current law. For current law for all of you guys, when you add up your deductible medical, you have to reduce it by what? Reduce it by what? 10% of AGI. Interesting, on their final exam, there's a multiple choice question that didn't specify the year. And to get the right answer, you had to use the old percentage. What was the old percentage? 7.5. So it really, someone should have updated that. So what Bill did is on that multiple choice question, I put the year 2012 down because then it's 7.5%. So right, the current, the exam in 2 weeks, 10% of AGI is the amount you can't deduct. It is true for the old folks like Bill, it's 7.5% for this year in 2016. But, and then it goes to the 10% for everyone. When I first started in taxes, it was 3%. Yeah, so it's changed. Well, let's think, what can we deduct? Start calling out things that are deductible medical. Then I'll go through some specialized ones that are on the exam. My exam. Okay, what are some deductible items?
Prescription drugs?
Prescription drugs, yes, and also insulin. Very good, excellent.
Co-pays?
Yes, the copay that you had to do when you go to the doctor, like $30 copay or something, yes.
Copays aren't deductible?
I'm sorry?
I didn't know copays.
Yeah, the copay, definitely. I have a copay here through my DeVry medical insurance that I get to
So
deduct.
that's only if you itemize.
Yes, yeah, oh, this is strictly itemized. Today is all Schedule A. That's this charitable stuff too, although there have been some rules throughout the years about non-itemizers getting some charitable deduction. Yes, keep going.
Dental.
All the dental specialties, yes, the whole group of dental specialties. All the doctor specialties.
They give you a standard mileage for driving to.
Excellent here, Tracy. Medical travel. That could be the mileage allowance if you're seeking medical care. It also could be the ambulance The Medicar. What if you're an old person and have to take a taxi to go to a medical appointment? Yes. What
Parking
if-
too, right?
Probably,
Parking
yes.
at hospitals.
What about this? I had a student back in the 1980s, a younger person like yourselves. She said, Bill, I'm always exhausted. I've been to all these darn doctors and they're doing blood tests and no one can find out what's wrong with me. Well, she went to the Mayo Clinic in Rochester, Minnesota, and they diagnosed her. Today they probably would know, but this is the 80s. She had Lyme disease, L-Y-M-E, the infected deer ticks. So I'm not sure, I have a feeling they could just give her medications that would give her a little more energy. I don't think they could cure it. But you go to the Mayo Clinic and you can deduct the cost of transportation there. And I think you get $50 per night as like lodging, because usually it's outpatient procedures. And if it had a minor child, then obviously the parent has to accompany them, or a guardian, or a mentally deficient adult would have to have extra supervision by someone who also would get the $50. There used to be a rule about if comparable medical care was available in your area, but that no longer is the situation. So we have heart doctors up here. You want to go down, well, I guess you don't want to go to Houston now, but they have a big heart center down there if you can wade over to it. A lot of flooding down there. You know, there you could deduct the cost of going to Houston for that procedure.
You deduct your premiums?
Hospitalization or medical insurance premiums, yes. Until I became Medicare eligible, because I was uncertain about my job security here at DeVry, I had separate insurance with a relatively large deductible, and it was costing me $1,000 a month.
$1,000 a month?
Yeah.
Good
As soon as I
Lord.
signed up for Medicare, I dumped that. And I never placed any claim against it, but I was fearful of losing out, because at my age it would be difficult to have gotten health insurance if I lost the job here. So,
Not anymore.
yeah, well, yeah, that was before the Affordable Care Act, right? I've been Medicare eligible for a number of years now, yes. Keep going, other medical expenses.
Smoking cessation classes?
Now we're gonna talk about that in a few minutes, yes. That'll be on the exam for sure.
What about if you need what do you call it? Like equipment, like, you know, something?
Yes, hospital bed, oxygen tank, wheelchair, walkers, canes. Yes, all those if you buy or you're paying rental. I remember my mom had some of that stuff near the end. And then eventually had to go to a nursing facility, but I tried to maintain her at her place for a while, and she had that little portable potty thing and stuff, and oxygen and all that stuff. Yes. You know, we talked a lot about physical ailments, but what's a major problem today?
Oh,
Mental, God. So psychologist, psychiatrist, whatever.
What about
Eye doctors, contacts, eyeglasses, those would all be included?
for mental illness? What about like counseling and therapy?
I would hope that they would qualify
Like
because,
rehab, so what about rehab for?
yeah, now, yeah, at Central DuPage Hospital, they built a brand new building there for alcohol treatment. I would argue
I
that
think
that should be,
I think
because
that-
alcoholism is a disease. I would hope so, and the drug rehab too.
Yeah.
I would hope so. I would certainly argue that. Now, I had a client, I used to work that second job at Northern Trust, remember, during tax season. And what on my client list was a very wealthy family and major income from trusts. That's why we did their individual returns. And they, of course, could never deduct medical because it never exceeded, at that time, the 7.5% of AGI. Well, one of the years, something happened to the wife in January. And she must have, I think she suffered a stroke. And her husband, to keep her at home, had 3 RNs on duty per day. In other words, in 8-hour shifts. Cost him out of pocket, this is 1985, cost him out of pocket $200,000.
A year?
Yeah, for the year. And he could afford it, whereas we could not. And I remember, plus all the other medical expenses that he had to pay for. And I remember that that year, they could deduct medical because they exceeded the 7.5% of AGI. So visiting nurses. Now here's some from the exam that you wouldn't think of. Okay, first.
Is there an income limitation on the medical?
Not that I'm
Is it
aware.
very low?
Not that I'm aware of.
So if these people had like 400 grand of medical expenses, as long as it was over 7.5% AGI?
I think they could deduct the entire thing, yes. Now, someone would look at their return because it would exceed the limits that are built into the computer program. But these were all legitimate. You know, I mean, most cases, we would probably have to put our relative into a facility for that rehabbing, or Mary and Joy over here does a lot of work with stroke victims.
What about nursing home?
Now, interesting. When again at the Northern Trust, we had a bunch of the old ladies in the Presbyterian home in Evanston. And I always had to get their monthly bills from the nursing home. Because most of what they were receiving was what?
Like lodging?
That's right, room and board, not deductible. And the old ladies had their hair done once a month and they often subscribed to the Tribune. Right, it was only the occasional $5 aspirin or something that would be deductible. So let's follow up on that. Let's say your mom is your dependent. She's living at your house and she's driving everyone in your family crazy. So you put her into a nursing facility, but she does not need skilled nursing care. She's ambulatory, she can take care of herself. Okay, is that a medical expense deduction, as Tracy brought up? No, because basically that's room and board. Only if she gets nursing care, and that would have to be separately broken out. But what about this? Your mom is not your dependent because she has a little too much income, but she suffers a stroke. And you are paying her medical expenses that are not covered by any insurance or government program. She's not your dependent, but she's getting medical attention. Can you deduct those medical expenses? Pay it on her behalf. Yes. That used to be in publication 17, the expanded instructions for the 1040. It said if someone would be your dependent, but they had too much income, you can deduct medical expenses paid on their behalf. But of course, that has to exceed the 10% of AGI. What about this? They often say doctors bury their mistakes. Funeral costs for failed medical care. Is that a medical expense? Obviously, no. Although one person last time thought that was true. Usually I can see why there's wrong answers, but sometimes I shake my head. It would be beneficial for everyone in this room, obviously it's more for me, to join LA Fitness or something, a health club. So can you deduct as a medical expense under normal circumstances health club dues? No. They are deemed to be for the general improvement of your health. What about this? My ex-wife's brother and his wife always had an au pair. It's like having a governess or a nanny to take care of their two boys. You know, that's part of wealthier society. Maybe some of you had a governess or nanny. I'm not from that social class, sorry. So let's say you have a governess who has medical training and she's helping to care for your child. But is that a deductible medical expense? No, because she's not, although she has medical qualifications, she's not providing medical care. She's basically doing like wipe and diaper. So, sorry.
Would that be daycare or like childcare?
Yes, that might entitle you to that kind of a deduction, but not medical. Now, Margaret pointed something out, and there's two areas where they've actually had some liberalization. One of them doesn't affect me, the other does. So let's talk about them. The first is, and I'm going to ask for this on the exam, I'm going to say, what is deductible, what is not deductible. I want you to just kind of reiterate what I'm saying now. The first item, smoking cessation, C-E-S-S-A-T-I-O-N, cessation, is like no smoking, in other words, programs. Now there's an N word here we need to know. When you think about smoking, what N word do you think of?
Nicotine?
Nicotine, so make sure that's included. This is Revenue Ruling 99-28. 99-28, so it shows when this came into the law, 1999. Our first category under smoking cessation programs will be deductible, the other will be non-deductible. I want both reiterated on exam 2.
What was that, I'm sorry, Rule 99?
Now, it's Revenue Ruling 99-28. 99-28. Notice it's before 2000. So how do we show the year?
Just 2 digits.
Just the 2 digits. Remember, once we went to 2000, we had the 4 digits. So we'll have no problem year 3000 converting over. No Y2K. All right, under deductible, the unreimbursed cost of smoking cessation programs, the unreimbursed cost of smoking cessation programs, and prescription drugs to alleviate, and I need this N word, nicotine, N-I-C-O-T-I-N-E, to alleviate nicotine withdrawal. They'll repeat that, I will. The unreimbursed cost of smoking cessation programs and prescription drugs to alleviate nicotine withdrawal. Someone asked about the non-deductible on Tuesday. Non-deductible, non-prescription drugs such as nicotine gum or patches. Nicotine gum or patches. I've never smoked. Well, tobacco. So this does happen. Well, I'm from the 60s, guys. What can I say? So anyway, this would not impact me, but somebody, we did mention one thing in class, and maybe someone can research this. These e-cigarettes, which is vapor or something. I'd like, if someone can find some guidance, I'd just be curious. Or are those not addictive?
That's new.
It's new.
No,
I
they
mean,
still
yes.
have nicotine in them though. So.
Yeah, that's
They
why
just
I'm
don't have the
curious. There may be no
cancer
guidance in this area. And if I brought up 5 years ago, what are you, do you ever used e-cigarette? You say, what? What's that? Now, the other one unfortunately does impact me, and I believe it's, I'll put down weight loss programs to treat, and I need the O word, go ahead and say it, obesity. I look in the mirror and I can see that I don't have that figure I had when I was in the Army. Okay, so weight loss programs to treat obesity, I believe, but this I'm not sure of. I believe this is Revenue Ruling 2002-19. 2002-19. Someone can maybe reconfirm that for me. 2 categories again, deductible and non-deductible. Deductible. This is deductible now. Enrollment and monthly membership fees. Enrollment and monthly membership fees in weight loss programs to treat obesity. The enrollment and monthly membership fees in programs to treat obesity. I heard on the radio the other day, they were interviewing Seattle Sutton. That's actually her name. She's the one who set up that thing, that weight loss program. And I guess it's like Weight Watchers and Jenny Craig. You don't have to worry about that. You're so slender. Now, I know why those people lose weight, and it's not just exercise. Did you ever see the meal portions? The spaghetti, what is about this much on the plate? So I guess even with negligible exercise, if you're only getting in about 300 calories a day or something. The non-deductible, the cost of diet-related food. So the cost of diet-related food. So you get the Seattle Sutton food, that's not deductible. And that makes sense because you normally have to eat anyway. Now, I did have a client back in the 70s where, now this is back in the 70s when these things were really hard to find, had a medical condition where most foods were inappropriate for him. You know, nowadays we have this lactose intolerant, and we can take care of that. You know, we've got these low sodium diets. You know, we've got what these people can't eat wheat or something, gluten-free. Now these products are available. Back in the 70s, it was hard to find stuff. Because I remember if you have an extreme, write this down to another category, put down extreme diets, extreme diets. If somebody has an extreme diet where they got to get specialized food, then you could deduct the cost of the special diet. The cost of the special diet to the extent that it exceeds the cost of the special diet to the extent that it exceeds the cost of a normal diet. And I actually did a spreadsheet back in there, well, that was probably the Lotus 1-2-3 days, back in those late 70s, where I went to the Jewel and I looked at the sodium-filled soup and the, you know, the cheese that was filled with all kind of crap and everything. And then I compared it to this health food store that sold these items and had a difference. And I was ready for the audit, but it never got reviewed. Now, one other category here, then we'll move on to New Horizons. And that is new category, capital improvements for medical purposes. Capital improvements for medical purposes. Let me give a measurement of a law. This we're assuming that there would be a deduction. The deduction would be the degree. The deduction would be the degree to which the cost of the improvement. The deduction would be the degree to which the cost of the improvement exceeded the increase in the fair market value of the property. So to what degree does the cost of the improvement exceed the increase in the fair market value of the property? Let's say you're in an area like Florida where you take a home and you have all the sinks lowered, you have wheelchair ramps put up and so forth, because a lot of people become immobile when they get older. That would probably increase the value of the residence because there would be a tremendous demand where there's a lot of old people to perhaps have wheelchair accessible facilities in the home. So there you probably would have a limitation on how much you could deduct. But there was a case out of California. Think of Southern California. When you fly into LAX, for example, often in the backyard of these homes you find in-ground pools. Everyone seems to have them. And there was a case where a lady had extreme osteoarthritis. So the doctor prescribed hydrotherapy. So she had in her backyard an in-ground pool that was 3 feet deep at all locations. So it's not your traditional pool that slopes to the deep end. IRS challenged this. This went to court. What do you think that kind of a pool in LA did to the value of that residence? It reduced it. Because most people, they want an in-ground pool, don't want it to be 3 feet deep at all locations. So they said it reduced the value of her residence, and she was able to deduct the entire cost of putting in the pool, and I've never had a pool, but the cost of maintaining the pool. I guess there's chlorination and other stuff that's required. There's a lot of cases out there involving medical expenses. Tracy told us about the ones for the dancers and stuff, remember? So please, find out things. There's some cases involving cosmetic surgery, for example. Usually, let's say somebody wants to get a nose job because their nose is they think it's too big. Is that deductible? Or what about if you're not wearing your seatbelt and you are in a collision and you don't have airbags because it's an old car and you crash into the windshield and you got all cut up and scarred? You know, what's the rule on cosmetic surgery then? So take a look, there's so much interesting stuff.